love the channel and find it useful in becoming a happy retiree. Subscribe today. Good morning, Nancy from Decatur. Good morning. What's going on? How can I help?
Hi. I am wanting to get your thoughts on an asset called MLPI. I know I heard you talk about it a couple of years ago, but an advisor we had about 3 years ago put us into quite a bit of it. It's down like 46%. So I wanted to get your take on that, if we should dump it or hold on to it or what you were doing.
Okay, so let's go. I'm going to actually pull this up as we speak. So MLPI, which is technically it's for those listening. It says the label on this. If you pull it up on online, you'll see it's the UBS eTrax Alarian MLP Infrastructure ETN. Really, what this is an ETN is an exchange traded note that tracks an index. And this one tracks the Alarian MLP. MLPs, master limited partnerships, basically pipeline companies. So this is an energy pipeline company investment. And let me take a look at how this, so over the past year, so this is a 1 year chart, MLPI is down 21% in price, but has paid, let's call it 6 to 8% over that period of time. So you're talking about down, let's call it down 14%, down 13% if you were to count the dividends. But worse than that, Nancy, if you go back even further. And here's the deal. MLPs have had a really rough patch. First of all, back when oil was headed to 100, and remember, I think it was Goldman Sachs that said oil is going to 200, they got greedy. So it used to be, for many, many years, MLPs were really kind of these boring toll road type model companies. They said, look, we're going to go borrow money. We're going to put in a pipeline from Wyoming to Ohio, down to Oklahoma, let's say, or all the way down to Louisiana. And it costs a bunch of money to do the pipeline. But we're going to get contracts with all the big oil companies because they're going to use our pipeline. And they're gonna. That's how they transport the bulk of crude oil, let's say, from state to state to state. It's not through trucks. Those are those big tanker trucks. That is the last mile, if you will. Or but the long range of how these commodities get transported around the country, they're through pipelines. So pipeline companies will say, look, we're going to charge you, give you a 10-year contract or 5-year contract. We're going to charge you for the amount that you move through the toll road, if you will. And that was a really good business for a long time. And they paid 5 and 6 and 7 and 8 and 9% and did very, very well. And then when oil started to go higher and higher and higher, and everyone thought oil was going to $200 a barrel, before, remember, it dropped under $30 a barrel, they got greedy and they wanted to get in the exploration business as well. So all of these boring, sleepy businesses that just made pipelines and charged people to use them, they started to get into exploration, which is a much, much, much riskier business, particularly when you're drilling holes thinking oil is going to be at 100 and it drops down to $25. And that's why you saw the whole industry just get absolutely crushed. It is really not recovered yet. The reason I took this call, or I think it's an important one, is that there's an article in Barron's this week. The title of it, it's all about MLPs. It's time to give MLPs another chance. And I've talked about kind of the same theme, that what they mention in this article is that these companies have kind of cleaned up their act. So they've gotten back to their core business. They've gotten away from the riskier exploration business, and they're back to just charging people to use the pipelines and charging companies to store fossil fuel. And oil prices have come way back up. So oil prices have gone up and up and up. And from what we're seeing, and the article in Barron says something similar to this, is that they have underperformed the general market and underperformed the oil market right now, the time frame we're in today, more than they ever have. So they have been frustrating. It's been a tough asset class to be involved with. But I think the next year or so, I think at some point it's got to catch up, meaning that the prices of these MLP companies, and that's exactly what you own. MLPI will track it's a large basket of pipeline companies. Some are large, some big pipeline companies, some kind of smaller cap pipeline companies. So some of these smaller players. And at some point, I think the prices of these MLPs catch back up to an oil market that's been getting better and better and better. So I would try to be patient here, Nancy, is my take on it. Again, it might not happen for it might not be the next week, month, or even 6 months, but I think over the next year or two, particularly if oil stays in the $60 range, it's hard for me to believe that these pipeline companies don't finally catch a bid. So I would, again, I think patience with these is the answer. And yeah, the distributions are pretty significant. I mean, you look at Enterprise Products Partners, EPD, the yield on that 6.4%. Magellan Midstream Partners, MMP, yields 5.6%. Plains All American Pipeline, almost 5%. So a lot of yield here. And I think at some point, because they've gotten some religion, I think they finally come back. And at some point, we'll do well again. Time will only tell. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.